All right, welcome to Mind Over Matter. This is Cedar from Market Mastermind. I am here with the members. Try to do every week a psychology of trading group coaching session. And so it looks like we're back onto that for Wednesdays at lunchtime. So I just posted, let everybody know that we have that starting. And I always have content ready to talk about. And it's really driven off of what I'm seeing from our traders in our room, from what I'm experiencing myself, actively trading these markets, and more importantly, trading psychology in general, because it is really what makes or breaks the trader. So you can have the greatest technical analysis, and when the push comes to shove as far as executions, the brain gets in the way. So it's all a head game as far as I'm concerned. Definitely made the difference for me in my trading career. And it was the only way I went from being a consistent loser. I lost for 2 years, not straight, but definitely, when you look at the overall, I lost money for 2 years, net out by the end of each year. And that's really typical. I don't meet very many people that don't do it for at least a couple of years. Sometimes with good coaching, and that's the purpose of this group, it can be done in a shorter time frame. I know a handful, and it's a very small amount. I know a handful that have done it in less than a year, less than 6 months. So if you're struggling, know that you are not alone. And the point of community is to be working through the concepts that we need to understand and to be able to manage of ourselves as our own risk managers in retail trading. So that's one of the most challenging things, is when you're trading on your own, even within a community, there's nobody behind your shoulder saying, and you're sitting out now. So you really have to develop that skill set where you can say, I'm not seeing this market well, which is why we have rules in place. For me, it's 2 in a row. I put myself on a timeout on a third in the row. So if I come back after 2 in a row loss, put myself on a timeout, reassess, did some journaling. If I come back and take a third loss in a row, I am automatically out for the day. And that came about because I figured out, once I've taken a third loss, I'm not making good decisions. And there are times I can come back and trade later in the day, but usually by a third loss, there's something distracting me in my personal life or my business life outside of trading, or whatever. Something is going on that's keeping me from being fully engaged in what I should be doing as a trader. So if you've got meetings going on, if you've got conflict at home, if you've got something happening that's going to distract you from paying attention to the details you need to be paying attention to, which is all your levels are marked, you're ready from an execution perspective. If you're going to be distracted, you won't be able to do it. So really important that if you think there's a chance you might be pulled away, that you've got your take profit in place, that you've got your stops in place, and you're not finding yourself, oh, something happened. And I do have my emergency stops, my wider trailing stops there just for that type of reason. There could be a broker issue. There could be a health emergency. There can be all kinds of things that happen in daily life. Your power could go down and you could lose your machine. Who knows? Anyway, all kinds of things could go wrong. And it's important that you're putting all the pieces in place, anticipating what could go wrong, and making sure that you've got your stops in place to be able to take care of yourself and ultimately keep your powder dry. So for me, that's the key. What I wanted to focus on today is that you need to own your actions. There's always, as we're talking about that, right, anticipating that things can go wrong. If you always have an excuse for why you're struggling, if there's always some kind of, oh, I was distracted by the kids walking by, it is your job as a trader to get that figured out, because you know what's going on in your life, right? You know what the possibilities are. And there are the random things. Like, I had that one time that the goat or the horse had rolled up against the fence and the goats were like jumping on her and she was stuck. Her legs were jammed into the fence. I flattened my positions and went outside to go try to extract her from the fence. That stuff doesn't happen all the time. And I live on a property with 4 horses, currently 11 goats, who knows how many chickens, ducks, geese, like all kinds of animals. So stuff can happen, but I know that it can. And if something happens and my power goes out or my Wi-Fi goes out, which sometimes happens, I know that my stops are in place as emergencies. And so they do trigger every once in a while. And it might be me letting them go further because I hand manage for the most part the exits. I might give something too much room or whatever, but I know what my limits are. I know where I'm now going to be upset with everything. And so that's where the concept of own your ideas and your actions, I am fully comfortable with the full stop getting hit. Now, I'm not happy with it. I would prefer that it not, but it's better than now I'm down $10,000 on one ES contract or whatever, which can happen if you don't have your stops in place. So stops are mental stops. And I'm not talking about don't have a stop on your futures trade. I have my emergency trailing stop, but I have my, here's the levels I'm paying attention to. And if we don't see this price interaction pan out how I expect it to around this level, I'm going to go ahead and take it out, even if it is, like we saw earlier, just a couple dollars. So I took a $2 stop on a trade that I was like, no, it shouldn't be moving this direction. It ended up ultimately moving in my direction, but I wasn't comfortable with the price action at that time. So I'm owning my action by managing the trades and not just going, well, I guess since it didn't go my way, now I'm going to sit out because I took a loss. Losses are part of trading. They're a cost of doing business. And if you feel bad about a loss, I worry that possibly you're not trading with risk capital, or possibly you're in a financial situation that what you're calling risk capital, which is money you can lose entirely, and that's not to say we want to lose it, but it won't hurt your financial future to lose it. If you are trading with your last $1,000, your last $10,000, and you don't have another source of income, and there's so much financial pressure around that, even if you technically can afford to lose it, it's not risk capital because it's going to put you in such a stressed financial situation that most people, and notice I say most people will not be able to pull that together. They'll actually not be making as good of decisions as far as trade executions as they would have been in a better financial situation. I do know some people who actually perform better under pressure, but they are rare. Now, for me, I perform better under pressure with a deadline on a project, not with pressure around money. So if there's pressure around money, if there's something going on, I have learned myself to not be trading. Anytime you have the thought enter your head of, I need to make some money, the last thing you should be doing is touching your trading account. If you need to make some money, there are some other ways that are much safer. Trading is the only profession where you can sit and work all day long and pay to do that, right? All other professions, even if you're making minimum wage, you're going to walk away having made some kind of money in exchange for time. Trading is not in exchange for time. Trading is 90% waiting and 10% execution. And that 10% could be a loss, could be a gain. And it's the net sum of hundreds of trading days that make up the trading year. So owning your ideas and actions, with trading being the truest mirror of yourself that you will ever find. Whatever you're struggling with, you're going to struggle with trading, and it's going to cost you money, probably a lot of money. So if you're impulsive, if you are easily agitated, if you are impatient, if you have a lack of respect for capital, so not budgeting your life well, if you are into impressing the Joneses or impressing people by showing them how much money you have, you're probably going to struggle with trading because you're going to try to impress somebody and have that hero complex that Shadow and I were talking about over the last couple of the Mind Over Matter sessions. The key is you have to keep in mind who you're trading for and that you are trading for the future. If you don't own your ideas and your actions, there will be no future. And at some point, you'll either burn out from the stress of being impulsive or gambling or whatever it is that you're struggling with, fear, greed, FOMO, all that fun stuff. And everyone goes through it. But if you don't acknowledge first that it's what's making your trade decisions, and then learn to recognize when you're saying that stuff inside your head or outside your head, if you're talking it, saying it out loud, most people internally, that internal dialogue is how they process whatever those thoughts are. If you need to just take out a piece of paper and write down as you're entering a trade. So if you're not hand journaling, I keep a handwritten piece of paper for every single trade I do as part of my trade journaling. That is something I can just flip back and look at my thoughts, because if I start seeing a pattern of, and you can fill in the blank, a trade at this time, and here were my thoughts, a trade at that time, thoughts, emotions, that kind of stuff goes on there. It doesn't, you can put your entries and exits if you're, manually tracking as far as typing them in or using a tracking software. Most have a place for the emotional journal part, but you need to recognize, you need to be aware of when you're taking losses, what is costing you the most amount of money? Is it that you're just hoping that you can make money, the hopium syndrome? Is it that you missed a big move and now you're like, okay, I'm just going to get in? And that's why I use that term, on to the next. Is what it is. Now it's on to the next. What's the next A+ structural setup for me? And I literally do not think about the last trade I closed, win or loss. I think about it only from a journaling perspective, reflection. Is there something I can improve upon as far as my executions, as far as my analysis? Did I miss something? Super important. Did you miss something? So even if the trade was a profitable trade and well executed, was there something that you missed as part of that trade that could have potentially, maybe it didn't on that time, but could have potentially been a problem? Just because it's profitable doesn't mean something couldn't have been potentially a problem. So something that I think I hear a lot is the market's out to get me. Like the market makers, they're all trying to get me. They're not trying to get you. They are doing the business of trading, and market makers are there to supply liquidity. They sell at the ask and buy at the bid, so they make their money in the spreads between them to provide you liquidity to be able to trade. They're not trying to manipulate the market and take your money. They're not trying to run your stops. Now, wholesale traders are trying to run your stops. So I think a lot of times they get lumped together, and wholesale and market makers, right, putting together positions as a wholesaler. If you think about the wholesalers, the market movers, the whales, those that are doing business in size numbers, they're like Walmart buying a lot of the most sought after toy, right, coming into the Christmas season. They buy a bunch of it because they've done their market research and they know that this is likely to be what moves off the shelves. And they buy a bunch and they fly, all those toys fly off the shelves. And then after Christmas, it's really kind of slowed down because you even got that little rush, like on Christmas Eve, where people came in like, oh, is there any left? Is there any left? And if there are some left after Christmas, guess what happens? It goes on sale. Trading is the same as retail business. Once that product is no longer in as much demand, it gets put on sale. So that's why you see huge reversals. Like if we're looking at the 30-minute candle on ES right now, effectively, we got run up in one 30-minute candle right up to the previous high of the day after inventory correction overnight. The shorts put their product on discount and bought themselves almost back to their cost basis. We're really back to their cost basis from the overnight. It's all about inventory. It's all about wholesale buying product and liquidating it. So they've been buying that product back from the overnight low. So the look below and fail, that look below structurally, and then they let it breathe a little bit and then it gets bought back more. Looking at trading from a different view or an outside type of model really will help you change how you think about things, because it's not anyone trying to get you, and you can get got, but that's like thinking the ocean is trying to kill you. The ocean is not trying to kill you. The ocean could give a shit less about you or anything you're doing. The ocean does ocean things and the market does market things, and they're both very powerful. So you have to figure out how to not swim into a rip current. And if you think about them from those perspectives, it's actually really easy. Because sometimes if you get caught in a riptide, which happens, you swim sideways to it. You don't swim against it. You don't paddle against it. Paddling against a riptide is like adding to losers. So that concept of not throwing good money after bad money, oversizing, averaging down. The only person trying to get you, or the only thing trying to get you, is you. So if you're struggling with something, it's time to look inside, reflect, and really not blame anyone else. If you take a loss, you need to analyze, was it a good technical setup and the TA was invalidated? If that's the case, a loss is a good trade because you took your setup and it was invalidated. If you're not journaling, it's going to be very hard to see these bigger patterns. So what you really need to do is focus on your comfort zone. If you are comfortable, there's a problem. And I put a post up. Let me go pull it up. I put a post up in the Psychology Risk Management channel from comfort zone to growth zone. And the comfort zone is a very small zone, and then you move from the comfort zone into the fear zone, because the first thing that happens is, man, uncomfortable equals fear. And so most of the time, people will actually pull back into their comfort zone, even though that's the next step to growth, is to get scared. You should be scared. You should be aware. That term that I use, head on a swivel, hand on your wallet, head on a swivel, like you're downtown at 2 a.m. in a dark alley. You got to pay attention to your surroundings. If you're not scared, you're probably in your comfort zone from that perspective. And then as you get past the fear zone and you realize what kind of influence you want to have from others, so you pay attention to your social media and see who is maybe distracting you from what your TA was, and you're like, okay, well, I paid attention to all these bears that are like short, like this is the sell-off, we're going to zero, and that's consistently costing you money. You need to heavily consider what your social media diet consists of. If you're in 5 different trading rooms and you've got voice channels running and you got all kinds of stuff, and it feels frenetic, it feels like all over the place and I don't know who to listen to, or you could be in one trading room with 10 analysts or 15 analysts or whatever, and it's not working. It feels like, man, I don't know who to follow. You need to tune into 1 or 2 that trade in a fashion similar, or what makes sense for you mentally. It's fine-tuning it. So owning your ideas and actions means that as you're learning to trade from other experienced traders, which would definitely be the purpose of a room like Market Mastermind, is not just to feed you alerts, not just be here like, okay, let me take all the alerts. The idea is to learn and grow so that ultimately you're using the analysis from other traders here, from me, as confluence or as an indicator supporting what your thesis is as well. So that's the goal. I'm having to readjust my ES chart because we are now above the previous high of day. And remember, I said the first time it was a short, probably not the second time. So I am sitting in cash here. The key is going to be for you to develop your skill set. And if you're busy and you're looking for that extra little bit of confluence, that's exactly what you want to be working on. Is, you see an alert, you're looking at a trade, or you just took a trade, Now you're making progress and starting to own your ideas instead of just waiting, because just waiting is always going to be a delay. And sometimes that's to your advantage. You make more money than me, and sometimes it's to a disadvantage. It's less money. It is what it is. But the goal is to not have you keep doing that forever. The goal is to develop you as a trader so that you, that's why I put at value area high, or entry trigger was previous high of day, look above and fail, that kind of thing. So those triggers, and they're all marked on my execution charts because I have been a part of enough different rooms and programs where it's kind of a mystery what they're doing. Mine's not. Mine has the levels marked. I'm talking about it. You never know when a level's going to interact, but if you've got an area that there's 4 things happening, like the 4 p.m. close, the IB high, the previous close, and the previous value area high, and we didn't make it there, it's got more support. So the idea is we want you to learn. We want you to be engaged in the community. The more questions you can ask, the better off you will be, because we have some very experienced, very seasoned traders in here that are happy to answer questions, even though they're not on staff, because maybe they're, working in another profession and they trade and they have been trading successfully, but they're not on voice and they're not just there just throwing information out, but they do answer questions as well as I do, of course. And Shadow, as he's coming back from his crazy work schedule, definitely answers questions. So the idea is you need to start owning your ideas and your actions so that you can grow as a trader within a successful trading community, not just looking for alerts. And if you are looking for alerts, I think we do pretty good as far as that goes. But I really, that's my goal, is to teach other people, not to just have them rely on someone, something, or whatever. So I am running short on time, but if you guys have any questions, make sure you tag me in Market Talk. I didn't see any response to the specifics as far as covering today. So like I said, I always have content ready, and let me know if something comes up through the week. You can just shoot me a DM, and usually I'll go ahead and address it then, but I'd like a lot of times to carry those forward into the Mind Over Matter segments. So I appreciate you guys being here and hanging out, and awesome to see all the successes, testimonials, the gains, all that stuff. The only reason I take the time to do this instead of just trading my accounts are what make me money. The reason I do this is because it's fulfilling to me to see other traders successful. Learning how to trade their own money is an amazing, amazing reward for me. So kudos, and we'll see you guys in Market Talk.